It was a mixed day on Wall Street. We did see the Dow Jones Industrial Average close higher, largely due to some excellent earnings reports from companies like 3M. However, a lot of the other indices did close a little bit lower. We had some negative news on the consumer confidence front where that number came in at an 18-month low. So we're trying to digest all of these earnings. Remember, this is the biggest earnings week of the quarter. Apple just came out this afternoon, so we're going to take a peek at that in tonight's video. We're going to look at all the different postures out there. The Nasdaq currently has a bullish intermediate confirmation signal set up using the market forecast indicator. And then we're going to go back to one of the themes that we've been kind of tapping into regularly so far in 2019 for our trade application example. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 29th, 2019. First of all, if you're new, welcome aboard. Go on over to YouTube, and while you're there, click subscribe to our channel. Also, check out our description area where you can sign up for our email distribution list, which will entitle you to seeing the stocks that are giving you overbought and oversold cluster signals in the S&P 500. In addition to YouTube, we're heavy users of Twitter. Make sure you're following me there. My handle is @BrandonVanZee. And if you get value out of these free YouTube videos, we would encourage you to click like and retweet anytime you see us tweeting about these market outlook videos that we're producing. We also have a presence on Facebook. Make sure you're checking us out there. You can see the group web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up in front of us here. And this is going to show us 4 different market indices here in the United States, give us a sense of what's been going on. So this is what I mentioned in the intro. The Dow Jones was up today. It was up 0.21%. It was the only one out of the 4 that finished in positive territory. You'll notice that the S&P 500 was down 0.15%. The Nasdaq was down 0.81%. The Russell 2000 was down 0.14%. So a pretty quiet day across the board. However, you will notice that all 4 of our indices continue to retain their strongly bullish intermediate posture. So just as a little bit of background, if you ever hear David or I discuss the posture, quote unquote, the posture, what we're referencing, unless we tell you otherwise, is that green line on the market forecast. That's the intermediate term line, and that's what you might use if you're more of the trend trading mindset where you're thinking about trades in the next couple of months. And as you can see in all 4 of the chart's cases, we've got the green line in what we would deem the upper reversal zone. So you can kind of see that right there and right there and right there. Anything above 80 is considered the upper reversal zone. And you can kind of read that line as well to make it a little bit easier on your eyes. It says right here in the label, intermediate 87.76 and rising is just an example here on the S&P 500. So anytime that number in green there is above 80, we would consider that to be a strongly bullish posture. In fact, it would have been considered a strongly bullish posture as we crossed above 50. So as an example over here on the S&P 500, notice that we emerged from that lower reversal zone below 20, and at that moment we would have had a weakly bullish posture. And as that kept on going up and up and up and up and up until it got till about right there, we hit the midpoint of that chart, which means 50 on the market forecast itself. At that point going forward, we would have considered it to have a strongly bullish posture. And you can see that's where the difference in the shading of the green takes place on the chart itself, just to make it a little bit more visually easy for you to identify as well. And remember, all of you that are premium market scholars are entitled to receiving those think scripts to build these charts on your own in our resources area of our blog. But at that point, we would consider it to be strongly bullish posture. In other words, it's a more fertile market environment to be placing bullish trend trades. So, basically the entire year so far of 2019 has been bullish. And while it has been fought and people might suggest the market doesn't deserve to go up, what we're trying to determine is where the market is, where it's been, and where we think it might be going, judging by these different technical indicators, including the market forecast. Now, one thing I did want to point out is that the Nasdaq Composite, that's your chart in the lower left-hand corner here. We do technically have a trade signal being established right now as of tonight's close on the Nasdaq Composite, and that is what's known as a bullish intermediate confirmation signal. Now, in order to get that signal, there are two different pieces of that puzzle. The first piece of the puzzle has to be that the green line, or the intermediate line, is what we would consider to be bullish. Now, again, bullish can be determined by just simply having the green line in the upper reversal zone, like it is right now, or bullish can also mean if it's between the 20 and 80 reversal zones, it has to be trending up. So like during this time period down here where it was going up, we would also consider that to be bullish. So that's step number one, identify a bullish intermediate posture. Step two is that the red momentum line has to be in the lower reversal zone. And you can see that is the case here as well. In fact, let me do this. I'm going to right click on the chart and go to maximize sell so that way you guys can see this a little bit better. But you'll notice down here that the red momentum line is now in the lower reversal zone. Remember, you can also read that in the labels itself as long as you're reading that for today's information, right? These labels are just going to show us what the current readings of each of those colored lines is. If you wanted to go back in history and look at them, you'd have to kind of do that a different way. But for right now, just be aware that the Nasdaq has what's known as a bullish intermediate confirmation signal. Now, one thing that we try to also identify is where is the blue line? Now, technically, the blue near-term line is not part of the bullish intermediate confirmation signal, but what we've noticed throughout the years is if the blue line is positioned between 50 and 20, that typically has better outcomes for folks that want to take advantage of the bullish intermediate confirmation signal, which is essentially a buy the dips mentality. It basically says, okay, we have a bullish intermediate posture. We're waiting for a momentary pullback in price to kind of take advantage of that bullishness. Well, today the Nasdaq was down 0.81%, have a nice red candle there, so that would be considered a pullback within a bullish trend. And so folks that wanted to kind of reload the gun and go for another bullish trade here might have their excuse with the Nasdaq. Of course, mentioned the Apple earnings, and that will certainly impact the Nasdaq along with a lot of the other indices tomorrow. Remember, Apple is no longer just known as a tech stock in the Nasdaq. Of course, it's one of the biggest companies in the S&P 500 and also in the Dow Jones. And so it will have a big impact on stocks across the board in the morning. Let's just have that conversation now, perhaps. So let me go over to the internet here real quick first and kind of go through a few things. First of all, remember that I do the 9 at 9 every morning. Those of you that are subscribed to our notifications on our website should be getting notifications about that at 9 a.m. Eastern time. But the idea with the 9 at 9 is to give you guys a heads up which large cap and mid cap companies are up or down before the stock market opens. It can give us a good indication of what stocks are going to do, and it can be helpful if you either own any of the stocks or if you own some of their competitors. Remember, a lot of times companies will trade in sympathy with what their competitors are doing in terms of earnings, and so the 9 at 9 can certainly be helpful all times of the year, but it's especially helpful during these earnings weeks where we have so many companies reporting earnings to look for various trade ideas. So I mentioned 3M in the intro. Of course, 3M is a big Dow Jones industrial company. You can see here even before the stock market opened today, we had a pretty good indication it was going to have a good day as it was trading up 2.7% before the market even opened. Now, one thing that I do find fascinating about this is looking for those that had reversals. We actually had a good conversation today in my dividend growth investing trading room about Whirlpool. And Whirlpool, you'll see here, before the stock market opened today, was down 6% in the pre-market. It was trading at $116. By the end of the day, Whirlpool actually ended up closing way up. In fact, let me show you this chart just to kind of emphasize it. Let me go over here to our dividend stair-step chart and pull up ticker symbol WHR. Notice that Whirlpool actually ended up here at about $136.49 on the day. That was up nearly 10% on the day. So we went from Whirlpool being priced at $116 pre-market to closing at $136. That's a $20 per share difference there. Sometimes that's a heads up when the market initially gets it wrong and they perceive an earnings report incorrectly and everybody gets caught on the wrong side of the trade. So keep your eye on Whirlpool. Obviously a nice little W pattern playing out right there. And of course, it was priced very nicely here earlier today when it was right at that orange line, which is our average high yield line that suggests it's historically attractive to income investors as well. So anyway, take advantage of that 9 at 9, particularly during this earnings environment right now. I want to show you some of the stocks that are producing earnings at this current juncture. And you can see this is our big kahuna week for earnings. We have, I think they said that there were 13 out of the Dow Jones 30 stocks reporting this week. So nearly half of the Dow Jones reports this week. So a lot of big names on the board. But the biggest, or one of the biggest of them all, is Apple right there. And they did just report. So let's go ahead and take a peek at them and see how they might be shaking up here at the current juncture. So give me a second to pull up Apple. Let me go over here to the trade tab. And you can see that I've got Apple pulled up here on the trade tab. And in the middle here, you kind of got a little chart that's a 1 day, 1 minute chart. And it can give us an indication on whether the stock is trading up or down after hours. This shaded part that you're seeing right here, where I'm kind of highlighting with my mouse, is showing you the extended hours activity. The stuff in the white kind of in the middle there is the normal session. So if we kind of zoom in there, you'll see that now that we're in the after hours activity, right here is where they reported their earnings. They reported their earnings about a half an hour after the closing bell here today. And as soon as they released them, the stock shot all the way up here to about $160. And that's about where we're trading right now. You can see that the bid price shows $160 here. And the last price is just under $155. And so that's just a reminder for your eyes when you're looking at the Thinkorswim platform that the bid and the ask is showing us kind of in real time what's going on with that security, even though the last price is showing us what happened with that stock in the normal session. So it closed the normal session at 154.68, but is currently trading about $5 per share higher than that. So that's a positive sign. Obviously, with Apple being such an important component to all those different indices that I mentioned, if you are bullish in the markets, you want to see Apple doing well. And so far, our first glimpse at the company after hours is doing quite well. So we'll see if that bodes well for tomorrow or not, but right now it appears to be a pretty good sign. Let's go ahead and get back on track with some additional charts here. This time let's go over to our 3 green arrows chart. This is going to be chart 4C. And one thing to report here that is a little bit different than recent presentations that I've done for the Market Outlook video is that we do have a new red arrow coming into place here in the Nasdaq composite. Notice that on the MACD histogram, we got a red arrow there, which basically signifies a little bit of a loss of momentum. Now keep in mind, with Apple coming out strongly here tonight, that red arrow just was formed today on the daily candle, and it just barely went below it. In fact, you can barely even see it with the naked eye that it's below there. Remember, some of these MACD red arrow signals can come way, way, way down to like here, like we saw on Christmas Eve. So this is almost an afterthought, especially if we have a really robust rally tomorrow with a bunch of tech stocks after Apple's big release here tonight. So anyway, that might be a quickly fleeting red arrow there, but nonetheless, I'll point it out there for you. Otherwise, the other 3 indices do continue to retain their 3 green arrow status, which basically says that these are better times than not for trend trading to the long side of the market rather than to the short side of the market. Let's go ahead and get into a little bit of intermarket analysis 12 grid now. This is going to be chart 4E. And as a reminder, when we're looking at this, we're going to take a peek at the green and pink backgrounds of the charts to identify whether we have bullish or bearish postures using that market forecast intermediate term line. And so, as we look at this, there's a couple things that I did want to point out. First of all, we are starting to see a little bit of positive price action when it comes to the income-oriented asset classes. Notice up here, we've got preferred stocks having a decent day to the upside and having a bullish posture. Notice that we have master limited partnerships up today, also having a bullish posture. We have junk bonds that were not up today but do have a bullish posture. And then we have U.S. government long bonds that was up today. In fact, that's at kind of an important junction right there where it looks like it might want to bounce higher off of that 30-day moving average. We're going to keep our eye on that, but right now it does retain that bullish posture. Even foreign bonds and REITs also have those bullish postures. So right now, this is a environment where investors are starting to find some interest in some of those income producing areas. One thing that I wanted to point out, because it will pertain to our trade application example today, is right down here, gold. I basically mentioned gold every single presentation, so I sound like a broken record. I get it, but nonetheless, it continues to capture my interest. The fact that gold surged higher to end 2018 when the stock market was plunging made some sense to me. The fact that the stock market started to rally significantly in 2019, yet gold didn't give back hardly any of the gains that it had from late last year, was surprising. That was a little bit of a tell, a little bit of a giveaway. Something is up. That was not what I would have assumed to take place. So the fact that gold retained its strength above this rising 30-day moving average was very interesting to me. Now you'll notice what has happened for the last 3 days here. We have now broken out in a big way with gold. So keep that in the back of your mind. Again, it will pertain to our trade application example here in just a little bit. Before we get to that, let's go ahead and take a peek at a couple of other charts here while we're at it. Let's look at the foreign stock markets chart. And here you only see one pink chart on the board, and that is India, suggesting that India currently has a bearish posture. Now, this one had been kind of going back and forth between bullish and bearish quite a bit so far in 2019, and I didn't really know what to make of it. I was willing to give it the benefit of the doubt on the candles where it was giving us a bearish posture, yet we were still right around that moving average. My patience is growing a little bit thin with India at this point. You'll notice that after the last couple of days, we are now trading well below that moving average. In fact, notice that moving average now has a red tip on it, basically signifying that we have price below a falling moving average. That's coded within the ThinkScript computer programming code itself. So I know it's hard to see visually there. It kind of looks flat to your eye, but technically that is tilted a little bit lower. So that's not necessarily a great sign there. And it does look like not only do we have a bearish posture using the market forecast indicator, but now we're starting to see legitimate price action to kind of help confirm that bearishness there, where we did break down through some significant horizontal support areas. So be careful with India. It looks like it's kind of starting to unravel just a little bit there, but for the most part, a lot of these other countries are actually holding up quite well. And of course, since I've been talking about gold so much in 2019, I've also been talking about South Africa, mentioning that South Africa is one of the leading gold mining nations in the entire world. And just maybe if gold continues to retain strength, then South Africa could get a little bit of wind in its sails as well. Now, obviously, South Africa is much more than just a gold mining nation. They have lots of communication stocks and financial stocks as well. But it is also true that gold mining is probably a little bit more important to South Africa than it might be to a country like the one above it, Japan, as is just one example. So you can see here that South Africa is toying with the idea of breaking out to new 3-month highs. So that could be an area of interest for some of you that are looking to gain some international exposure. The ticker symbol for South Africa is EZA. The other ones, on the board are looking pretty strong as well. We've been rattling off Brazil and Russia, China. They're all looking pretty promising as well. And a lot of these that were lagging, like your Germanys and your United Kingdoms, are starting to play a little bit of catch up as well. So for the most part, the health check of the foreign markets right now is actually pretty reasonable. Let's go ahead and take a peek here now at our next 12 grid, which will be chart 4G. This will be our U.S. sectors 12 grid. Now, when we're looking at this, we can see two different pink charts on the board. One of them is the utilities, which of course the big story in the utility world has been PCG, or Pacific Gas and Electric, out in California, as we try to determine, are they filing for bankruptcy? What does that mean to common shareholders? And we watch that stock fly all over the place. Well, with the utilities as a whole, this is a place where perhaps they have less interest. If the stock market is doing reasonably well, like it has, perhaps the utilities are kind of an afterthought compared to some of the other areas of the market that could be a little bit more interesting. You'll notice that the materials right here, we're up 1% today, and of course gold mining stocks are part of the materials space. However, be aware that there aren't very many big gold mining companies. In fact, Newmont Mining is basically the only really large cap gold stock here in the United States, even though there are large gold companies across the rest of the world. But nonetheless, gold mining companies are part of the materials, and you can see the materials are starting to put in a nice little bounce here recently as well, now trading above a rising moving average. Healthcare was the other one that was in the pink there, and that one, it'll be interesting to see how it shakes out. It is still trading above the moving average, so you don't want to give up on it too easily, but perhaps investors are starting to look for some kind of more risky types of themes, like your technology-oriented themes out there, as opposed to some of the more defensive nature of healthcare. But otherwise, most of these sectors are hanging in there just fine. While we have a moment, I do want to always remind you guys that if you are watching the Market Outlook videos on our website, we do try to make it nice and easy for you to engage with us on a social media perspective. Remember that you can watch the video right here on our blog itself, and while you're watching it, if you're getting value out of it, come down here and click like on Twitter if you have a Twitter account. I appreciate the 93 of you that did that last time around. Generally, I'd like to see that number at 100 or more to understand whether you guys are actually getting value out of this. I know you can do it. There's been times in the past where there's been 300 likes, so I know it. You can do it. It's just a matter of whether you truly want to or choose to. So again, these videos do take a few hours out of our day to produce, and we want to make sure that they are being impactful and effective for you guys. If you do get value out of them, I would urge you to click like on Twitter to let us know that. If you're somebody that's on Facebook and not on Twitter, we also have an opportunity for you to click like right here by clicking this particular embedded logo that you see right here. Also, a quick heads up that for those of you that are premium market scholars, David has his options inventory trading class coming up tomorrow at 11 a.m. Eastern Time, and then I'll have my Strategy Lab swing trading class where we swing trade individual stocks at 2 p.m. Eastern Time tomorrow. We'll look forward to having some excellent content to provide for all of you premium market scholars. All right, let's get back on track now with our trade application example. I'm going to come on over here to the Thinkorswim platform. I am going to pull up chart 4A. And on chart 4A, we can see here that if I pop in, first of all, GLD to give us a good sense of what's going on with gold, right? We got a sense of that a moment ago, but just kind of zoom in there. This is the ETF that tracks the price of gold. Remember, a moment ago, we were looking at the futures contracts. Now, the shape of the charts will be about the same, but nonetheless, just wanted to confirm with your eyes here on one big blown up chart that gold is breaking out. Gold basically has been up for 3 or 4 days in a row and is now hitting new 3-month highs up here. It closed at nearly $124 on GLD. Now, one of the things that I did notice, even though I have been recognizing the strength in GLD this year, one thing that I did find a bit surprising, in fact, you might have heard me kind of referencing this with a Twitter conversation I was having with, I think it was David Chung over at Investors Business Daily. I was kind of referencing the fact that there hasn't been a lot of great gold mining stocks that have been breaking out. Now, of course, in this video here a few weeks ago, we did buy GFI. This is Gold Fields. And that one has done really, really well for us so far on a percentage basis. You can see it was up another 4% today. That was one of the few that I recognize as being kind of a breakout candidate or contender, however you want to say that. KL was another one that I was kind of referencing with David Chung, and that is Kirkland Lake Gold. This one I'm not as familiar with. It hasn't been around as long as Goldfields has, but nonetheless, you can see that KL is breaking out. But beyond those two, I didn't see a lot of legitimately liquid gold stocks that had decent trends. It was kind of a little bit abnormal. It wasn't what I was expecting. When I see a really strong gold chart, I expect a lot of strong gold miners as well, but we really weren't seeing that. The good news is it looks like they're starting to play catch up a little bit. So let me explain. If I pull up GDX, this is the ETF that tracks the kind of the senior gold miners, right? You can kind of break it down into the senior miners and the junior miners. These are the bigger players, your Newmont Minings, your Barrick Golds, etc. That would be in the GDX. And as you can see here just a few weeks back, it would have actually been here kind of breaking down below the moving average. It didn't look all that healthy, but with the kind of resistance that GLD has had in terms of not giving up the ghost, not going lower, it almost looks like GLD is pulling GDX with it. GDX, again, is the gold mining companies themselves as opposed to the commodity of gold. And so the good news is this. We now see GDX breaking out. Notice that our prior resistance area was here at about 2150 or thereabouts, and we've now reverted back to a bullish posture as well. Notice that we actually have a strongly bullish posture with this dark green color. So we have a breakout above a key resistance area. We have a price above a rising moving average, which is why that moving average is colored green. And then we have a dark green background telling us that we have a bullish market forecast posture as well. So what I thought we would do here today is buy a call spread on GDX. Now, again, one of the nice things about dabbling with some of these ETFs during this time of year is that we can avoid a lot of those earnings reports as well. Some of you are trying to intentionally avoid trading through an earnings announcement, which can make some sense. Obviously, stocks can surge or plunge on an earnings announcement. So some of you are looking for ways to kind of avoid that. Well, by trading an ETF, you can largely do that, since an ETF technically is lots and lots of companies within it, not just one. So kind of offsets that possibility of a big move against your trade. So what we're going to do is come on over here to the trade tab, and I'm going to pull up the March contracts with 45 days left until expiration. And the way that we usually structure these long call spreads is we buy the first one in the money and we sell the first one out of the money. Now you'll notice that GDX closed at 21.97 here today officially. And so our at the money strike price, of course, would be $22 even. And that would be this strike that I'm pointing at right here in the middle. So if we were to buy one that's in the money and sell another one that's out of the money, it would basically mean that we're buying the 21 in this case and selling the 23. Now, what we're doing, for those of you that aren't familiar with buying a call spread, what we're basically doing is we're taking a directional trade. Remember, this is different than a lot of the credit spreads that we talk about in these videos. A long call spread is a debit spread. It is not a credit spread, okay? So we're paying money out of our pocket. In fact, let me load this up right now just so we can have that conversation. So I'm going to right click on the 21 call. I'm going to then go to buy and vertical. And then when the vertical spread loads up, I will adjust it a little bit further by clicking on the 22 that comes up by default and then scrolling down and choosing the 23 instead. So in this case, we are going long the 21 call, and then we are shorting the 23 call to create this long call spread. It is a debit spread. We're paying 99 cents out of our pocket. So we need directionality here. We need this stock to basically go higher if we're going to make money out of this. And remember, that does make it a little different than the credit spreads. Credit spreads, a lot of times, if it just goes sideways, we would make money. If this thing just stayed exactly sideways from now until the March expiration, we wouldn't make any money on this trade. So we do need to be more confident in this trade setup. It does make the probability of success less, but it makes our upside reward possibilities also greater, because effectively what we have here is a situation where we're risking approximately $1, in this case, 99 cents, in order to make $1, right? Because we're paying $1 to access this $2 wide spread. So, we're basically right in the middle of that right now. So if it does go up to 23 or above by expiration day or on expiration day, then we would basically make $1, even though we were only risking $1. Now, if it goes lower, if we're just flat out wrong and gold just falls apart and it starts plunging lower, then all we're risking in the trade is $1 as well. So think of it as kind of like a 1-for-1 reward risk possibility here. So I'm going to go ahead and click confirm and send, review this one last time, and then ship that one off to the market, and we'll see if we can get filled tomorrow. All right, well, I want to thank you for joining me here tonight. This will actually be my last time here this week in the video. Normally I do Thursdays as well, but because I made up for one of David's presentations last week, he's going to help me out here this Thursday. So anyway, have a great rest of the week. I'll be in my regular classes for those of you that are premium market scholars throughout the rest of the week. This is the big Super Bowl week. Some of you know I'm a Rams fan, so sorry for you Pats fans, but I'm just hoping for a great Super Bowl. I think it'll be a fun one. However it shakes out, and I'll wish you all the best with your trades and your investments. Goodbye for now.